Yeah.
Hey, what's up everybody? Welcome to Ala's World of Finance. In today's quick video, we're going to talk about Amazon stock. And you know, Amazon is one of my favorite stocks. It's a lot of people's favorite stocks. It's doing very well, but it's actually past the $1,000 mark per share. So it's very high right now. And a lot of people are wondering, you know, if they're new investors, have they missed their opportunity? If they weren't already invested in Amazon, have they missed their opportunity? Is it too late? Is it too high? If you're an old investor and you've already been investing in Amazon, is this a moment where you should sell? You know, a lot of people are thinking that as well. Maybe they should sell and get out. So we're gonna talk about that because, you know, Amazon is up year to date around 30, almost 35%. So it's up a lot. So we're gonna talk about that. We're gonna talk a little bit about Amazon's business, some of the things that they're doing, some of the different markets that they're involved in. We're gonna make a case for buying it because I'll just give you a spoiler right now. I still think that you should be buying Amazon stock. In my opinion, it's just my opinion. But you know, I still think that it's a great stock to be investing in, so I'm going to give you all the reasons for that. And I actually ran out of space, so I'm going to be busting out my little journal here and just reading just a little bit from it, just because I didn't have enough space on the whiteboard. But I'll also be talking a little bit about some of the concerns with Amazon, you know, people that are bearish with some of the things that they're saying, but there's really not a lot, to be honest. And then we're going to cover all of the numbers. So we're going to go over all the little specific numbers, and I'll basically just be explaining some of the different things. They obviously have a really high PE ratio, but I'm going to cover that. I'm going to talk about all those things, and then I'll just give my overall opinion. So I hope you're as excited as I am, and let's go ahead and get started. So let's start by looking at their business. Now, when looking at their business, they are obviously involved in online shopping, cloud computing, you know, Amazon Web Services, things like that. They also offer, you know, a lot of digital distribution and different things like that. But as far as the different businesses that they own and some of the services that they provide, let's go ahead and list those off. So there's obviously Amazon.com. There's the Amazon App Store. There's Amazon Web Services, which is huge, and we're going to talk a little bit more about that a little bit further into the video. And there's also Amazon Game Studios, which I didn't even know about until I started researching for this video, where they basically are developing and, you know, plan on publishing video games. And that's good news for me, at least, because, you know, I talked about this in previous videos that the gaming industry is really taking off. It's seeing a lot of growth. And you know where we're really seeing a lot of growth is esports. And I did not know this, but Amazon actually owns Twitch. So twitch.tv, it's where they basically broadcast you know, people gaming and stuff like that. And Twitch actually broadcasts esports events. So this is huge for Amazon. This is a great opportunity. Amazon is really primed to take advantage of this, no pun intended, but this is a great opportunity for Amazon to basically cash in on the whole esports hype and how it's growing and all that kind of stuff. And we talked about that in the Activision Blizzard video. And they also have Amazon Prime, Kindle, some of the, you know, obvious things. They also have IMDb. I didn't know this, but they own International Movie Database. So some of these are kind of surprising. And then lastly here, there's also Amazon Go, which I kind of just want to briefly mention because I mentioned in a previous video where I was talking about Sprouts, and Sprouts is kind of like Whole Foods. It's like a grocery store. And I mentioned how I didn't really think that Amazon could compete with them too much. I didn't think Amazon could take them out of business necessarily because people would want their produce fresh, right? You'd want your organic or whatever the case may be, but you'd want your produce fresh and you'd want to get it instantly and stuff like that. Well, Amazon Go, they're basically testing this in Seattle, but they have a store where you can just walk in, get all the groceries that you want or need, whatever the case may be, and then as you leave, you get scanned and you get charged automatically to your Amazon account. So you don't even have to go through a cashier. Now, I'm sure that you're walking out with a healthy dose of radiation as well, but I'm probably the only one that cares about that anyway. So it's not I guess it's probably not a big deal, but it just kind of seems like Amazon is trying to take everybody out. It's like you tell Amazon, hey, you're not going to be able to touch, you know, this space of the market, whatever. And Amazon says, no, I think we can. And then they'll release something and they'll try to take them out of business. So it's just kind of crazy. Okay, now let's talk about the case for buying Amazon because we know that it's obviously over $1,000 per share. So let's make the case that you should still be buying Amazon. In my opinion, though, let's just go ahead and talk about it. So when making the bullish case on Amazon, let's take a look at their business model. Obviously, Amazon likes to reinvest their cash into the business so that they can continue to grow, and it's one of the reasons why they're taking so many companies out of business. Now that obviously leaves them with a high PE ratio, and we're going to talk about that, but and it also kind of leaves them with a low cash flow. But even when looking at the cash flow, in the trailing 12 months, I was looking at this in an article, and in the trailing 12 months, they had $10.2 billion of cash flow. In the preceding 12 months before that, the year before that, it was 6.7 billion. So it's been increasing despite the fact that they keep reinvesting so much money. And that just kind of shows how much, how much growth they've had and how much money they just keep making. Now, speaking about money, let's talk about revenue growth. So when looking at revenue growth, for the quarter here, for the last quarter reported, year over year, Amazon Web Services, I mentioned briefly how this is a big deal for Amazon. Amazon Web Services year over year up 43% for the quarter. So that quarter, same year, 43% positive, okay? So that's a big number. Now, year over year, international revenue growth for Amazon has been up 16% for the quarter. And then for the also for the quarter year over year, North America revenue growth is up 24%. Okay, so huge numbers. So you can start to see why the price per shares has been climbing so much, especially recently, because they had a great quarter. They had a lot of really good numbers coming out. Now, Amazon Web Services year over year operating income, last year it was 56%. Now it's up to 89%. Okay, so it's just like massive numbers here, guys. We're seeing so much growth, and Amazon has done so much already, and they continue to just be a beast and just continue to grow, and they're just taking out companies left and right. And we're going to talk a little bit about that as well. Now, there's also a couple of headlines going on with Apple right now, because Apple recently announced, and I forget what event it was, but they had, I forget if it was like a shareholders meeting or I can't remember the name of it, but Apple had an event, and they basically said that Apple TV will now be offering Prime TV, because they've had kind of a feud where like Amazon won't sell Apple TV on Amazon's website, and Apple TV won't have Amazon apps on their Apple TV. Well, now Apple TV is going to finally offer Prime, so that's going to be good for Amazon as well, so more people can see Amazon's TV services and stuff like that. When looking at the Amazon Prime membership, they're starting to be even more competitive, with like Costco and stuff like that, because they're offering discounts. They're offering pretty good discounts. So normally the price would be around $100, but for students, you get it for around $50. And then if you're low income, they just announced this recently that if you're low income, you get it for $72. And I think that breaks down to around like $5.99 per month or something like that. And this is a play that Amazon is doing to try to get into more of the lower income households, because we've seen historically that Amazon is usually found in medium to higher income households. But now they're kind of trying to get into lower income. So if you're lower income and you qualify, you can actually get a discount on Amazon Prime. And then we also know that Amazon has great deals with Amazon Prime in terms of gaming, and we know how good the gaming industry is doing. So they offer discounts on gaming. You can get a brand new game. I think you get 20% off if you have an Amazon Prime membership. You get it delivered the same day. So it's like, a lot of gamers are thinking, why am I even wasting my time getting a gaming membership with Best Buy or GameStop when I can have the video game delivered to my house on my doorstep on the day that it's released, and I get 20% off? It's a great deal. So they're doing a lot of really good things with the Prime membership. So I really like the fact that they're giving discounts here and there and stuff like that. Now, when looking at households, because I briefly mentioned how they're trying to get into lower income households. Now, when looking at household income, if the household makes over $112,000, 75% of them have a Prime membership. So that's a big percent, guys. And by the way, these numbers are growing. Okay, so even if these numbers don't seem that high, they're actually growing, but they are really high. 75%, that's a big number, guys. And if the household makes more than $68,000 a year, then 60% of them have an Amazon Prime membership, over 60%. So these numbers continue to grow. And then now they're offering discounts for lower income, so they're going to start to increase that as well. And I'm sure that they're going to keep doing different things to try to get into the lower income market, because they really want to compete with like Walmart and Costco and stuff like that. Costco tends to be, medium to higher income, but they're really trying to compete with Walmart as well and stuff like that. And then Costco price is, I wrote here $60 a year. I'm not sure if that's correct, but because I don't know, I thought it was a little bit higher, but I guess it is $60 a year for Costco. So it's pretty competitive with Amazon, and I think Amazon is a better deal, to be honest. I really like using Amazon, and I do a lot of things with Amazon. So anyway, that's just something to consider. Now, I have more positives in my little notebook here, so I'm just gonna read it off really quick. It'll be really fast, but here's some numbers, guys. These are pretty impressive. So as of May 2017, 21 retailers have announced the closing of 3,600 stores in the USA. That's incredible, guys. And I'm pretty sure that number was for USA, but that's incredible. So a lot of companies just kind of going out of business, a lot of stores, we're seeing it left and right. Now, Amazon accounted for more than half of online shopping's growth last year. So in 2016, Amazon accounted for 53% of online shopping growth. And in 2015, it accounted for 40%. So it's increasing, guys. So we're actually seeing more and more growth from Amazon. So it's incredible. And they're already such high numbers. And Amazon, and this is all for the US, Amazon represented 43% of all online revenue. That's incredible. And in the holiday season, when looking at online revenue, Amazon accounted for 38%. And the next biggest competitor, like the next highest number, was Best Buy at 3.9%. So 38% compared to what, like I guess 4%. So 38% compared to 4%. That's incredible, guys. Like we know that everything is turning into online shopping, and Amazon is just destroying anybody out there. Like nobody can compete with Amazon. That's basically what I'm taking from this. Okay. So there's obviously a lot of really good things about Amazon, a lot of bullish reasons to invest in Amazon. So let's just talk about a couple of the concerns. So when looking at the bearish case to avoid investing in Amazon, or if you were going to think that Amazon may be coming down or something like that, there's maybe a couple of things that we could look at. So in Amazon Web Services, we mentioned how this is a big deal for them because it's a growing area for them. But they also have a lot of growing competition, and that's coming a lot from Apple, Google, and Microsoft. And those are giants that have a lot of cash flow, and they can really invest in their web services, in their cloud computing, and they can really fight back against Amazon. And they're obviously already really dominant as well. So it's an area where there's a lot of heavy competition. I'll just say that. So even though Amazon Web Services is a good positive for Amazon, we have to remember that they have some heavy hitters, some heavy competition in that area, in cloud computing, web services, all that kind of stuff. Now, another concern is that their operating margin for the quarter actually decreased. So in Q1 2017, this last quarter, in North America, they had an operating margin of 2.8%. That's what they reported. Now, the prior year in the same quarter was at 3.5%. So we can see that the operating margin is actually decreasing. However, the CFO for Amazon actually mentioned that the reason that this is happening is because, again, and they say this all the time, is that they invest their money into their business. So they reinvest and they try to grow their business. So I don't really have much of a problem with it. So whenever I hear anybody making a bearish case on Amazon, it's hard for me to take it seriously because I know that Amazon is doing the necessary things to keep Amazon dominating, to keep Amazon taking all of these companies out of business. But I guess you could argue, it's a fair argument. You could kind of debate it, but I'm very bullish on Amazon. I'll just be completely honest with you guys. Okay, so now it's time to take a look at the numbers. So when looking at the numbers, let's start with some numbers I got from E-Trade. So they have a market cap of $482.79 billion market cap. Now their PE ratio is very high, okay? There's no denying it. I'm not gonna try to pretend that it's low or anything like that. It's very high, okay? It's at 187.9. But you have to remember, there is a lot of growth happening with Amazon. There's a lot of things that they're doing. They reinvest their money, so that's gonna happen. When you operate at such a low margin, you're gonna have a high PE ratio. So a lot of these issues, a lot of these little problems, I don't really look at them and I don't take them too seriously, to be honest. That's just my opinion, but that's kind of how I see Amazon. Now, when looking at numbers from Nasdaq.com for Q1, they reported cash and cash equivalents of $15.4 billion, okay, very high. Total assets of $80.1 billion, very high. But they have total liabilities of $59.2 billion, okay? So that's not even a 2-to-1 ratio, right? So It's more of like a, 1.5 ratio, something like that. So I usually like my companies to have at least a 2-to-1 ratio to have a strong balance sheet. 3-to-1 would be even better, but it's not that great. But again, I don't really care too much about the numbers with Amazon. When I see Amazon just destroying everybody, I'm not going to be like, oh no, they have such a high PE ratio or their balance sheet isn't like amazing, so I'm just going to stay away. No, I can't do that. I mean, that doesn't change the fact that they're still dominating. They're taking out businesses left and right, and they have so much growth coming up. So, so in my opinion, it's still a fair value in that sense. So when looking at the PE ratio, in 2016, it was at 206.37. In 2017, this year, it's estimated to be at around 153. And then in 2018, it'll be estimated at around 89. And the industry is estimated this year to be at around 34. So 34 compared to Amazon at 153. So that's obviously a big difference. But if you look at estimated growth, Amazon is estimated at 34.1, where the industry is estimated at 14. So that's obviously a big difference there as well. Now, when looking at the EPS surprise, so these are the surprise numbers for the reported earnings per shares. In quarter 2, 2016, it was up 56.14% in terms of surprise. In quarter 3 of 2016, it was negative 38.82%, so a bad number there. And then quarter 4, it was at positive 10%. And then quarter 1 of this year, the last quarter reported, they had an EPS surprise of positive 43.69%. So very good numbers there. Just that quarter 3 of last year wasn't so good, but the other ones are doing very well. Now, let's finish up here with the market watch numbers for the stock. So let's see how the stock has been doing. In 1 week's time, it's been up 1.42%. In 1 month, it's been up 6.54%. In 3 months, it's been up around 18%. Year to date, up around 34, almost 35%. And then in 1 year's time, up around 38 to 39%. And the 52-week low was actually in June of last year, and that was at around $682 per share. And the 52-week high was actually in this month of this year, in June, and it was at $1,016.50. And then currently, last time I checked, it was at $1,009.75. So I'll just go ahead and give my overview just to kind of wrap up the video. I think that Amazon is definitely a buy, in my opinion. I think that Amazon still has a lot of potential. I think you shouldn't be scared away because of how high it is or because of how high the market is or whatever the case may be. I don't think that you should let that scare you away. Now, if it ever drops, I would just see that as more opportunity to buy even more stock, because in the future, Amazon is just going to dominate everything. We see them taking out companies left and right. There's no reason to think that Amazon isn't worth what it's going for right now. Okay, so it's kind of a future investment. It's more of a long-term investment. It's a stock where you can just throw money in and not really worry about and just kind of wait for the long term. However, if you need money right now, be a little cautious. Don't just throw money that you need. If you need money for your bills or whatever the case may be, don't just throw money into Amazon, because it could obviously go down a little bit or whatever the case may be, and then you lose money. But if you have some money that you can just throw into it, leave it long term, then yeah, I think Amazon's a buy. Anyway, I hope that you enjoyed this video. I have a lot more coming up, so make sure you're subscribed. If you like the video, make sure you hit the like button. If you don't like the video, make sure you hit the like button and just pretend that you're punching me in the face. And if you really hate me, make sure you subscribe so that you can punch me in the face every time I make a video. All right, guys, thank you so much for watching. I hope you all have a wonderful, beautiful day. Take care.